All right, let's stay on the market. Bring in Ron Carson with the Carson Group. Ron, I know you heard what I had to say, the three big ifs. If those are all solved or we get decent movement on all three of them, then I think you're with me. We get the market going sharply higher. Is that what you're saying?
Yeah, I mean, as you're reading those notes, it's like you said in our research meeting, in our Macro Monday meeting, and that's exactly right, Stuart. But I think it's more than just that. I mean, we can't have, hey, we're agreeing to defer having a deal, because the market's tired of that with China. They want a real deal, and there's real risk here. I mean, we've heard companies announce that they're literally moving their supply chain out of China, and that's going to do real long-term damage to the Chinese economy. And so I think there's some urgency on both sides.
Yeah. And
I think it's about time we've clawed back, some economics for our country. But this is going to continue to be, a hot issue for the market.
Okay, hold on 1 second, Ron. We've got a statement from Alan Greenspan, former Fed chair. Do you have something more on this?
I'm just looking for it now.
He's saying the market we should run for cover.
Really? Greenspan?
I think Greenspan is saying that, yes.
Right now.
The party's over on Wall Street is what he's saying.
Yep.
Time for investors to run for cover more.
Greenspan's track record hasn't
Yes.
been so great here. I mean, remember irrational exuberance? I remember where I was. He scared the daylights out of everybody, and markets done nothing but go up, and then he fueled this massive expansion that led to the financial crisis. So I don't know if I'm going to trust what Greenspan said, but I think there's real risk in the market today. This has been the most complacent correction I've ever seen. The VIX at 24, and we've had this kind of sell-off. It just shows that we're nowhere near capitulation. So I think this is a good time to evaluate the level of risk you have in your portfolio. If you have a shorter-term time horizon, really protect the downside. Take some measures to do that. If you got a long-term time horizon, I love what you said, Stuart. These aren't stocks. This is ownership in companies, and these companies are going to do well over the long term. But it could be financially painful to look at a piece of paper to see what the market's willing to pay for your share of stock, i.e., your share of the company.
It's December, the 18th?
Yeah.
Almost to the end of the year. Starting in January, anyone with a 401k will have a chance to reallocate where the money goes. More in stocks, more in big cap stocks, more in bonds, more in cash. You can make all of those choices in early January. What would you advise? And again, we're talking long-term investors here.
No question, Stuart. If you have a long-term time horizon, I'm going to say more than 3 years, preferably 3 to 5 years. I mean, there's no better game in town than equities. And again, don't think of it as an equity. It's a piece of a business that you actually own. Now, true, businesses are disrupted much quicker than they used to be, so you just can't, when I first got started in 1983, you could buy them and forget about them and you do well. But the history is that companies are going to continue to do well. Economic growth over the longer term is going to grow. Standard of livings are going to continue to grow. And if you own pieces of business, it's the fastest way to grow wealth.
Got it. Ron Carson with the Carson Group. Thanks for joining us again, Ron. We'll see you again real soon. Thank you.
Thanks, Stuart. Happy holidays.
And you too, sir.